You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTer SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the Thursday edition of your bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from don't forget the OptionsInsider.com, the place to go for all sorts of fun, compelling, we hope engaging options content. All the earnings, move results, reports, links to all your favorite shows, and a whole bunch more, including a link to get your name, get your butt in the old secret club, theoptionsinsider.com/pro. I get you access to all the cool stuff we're doing on the pro side, and trust me, it's a lot of cool stuff. And of course, if you like what you hear, this, anything else on the network, throw a star, a like, a comment, or whatever your platform lets you do. Throw it our way. It does help new people continue to discover the content as we go around the horn and discover who's joining us on the old program today. First, let's go out to the sleepy options hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always great to be here, broadcasting live from the sleepy hamlet of option trading.
Everyone else in the town still asleep. So Uncle Mike, he has to be a little quiet. He has to use his indoor voice. As we keep on rolling, let's go around the horn. Let's see if the Skype gods are smiling upon him. He's having some technical issues way out there on the hinterlands of Maine. You know, sometimes the string, I should say, attaching his tin can to the other tin can in central Maine gets broken, and then things get wonky. But I do believe we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Is your tin can and string working, sir?
I don't know. Can you hear me okay?
Yes, we can hear you.
Okay. Yes, I am. It is working okay, and I must get my small dog, my steed.
Okay, you go get your steed while we go around the horn. I believe he's back in NYC, listener, so we're not doing the show in the same room again. He is the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, welcome back to the show. Where are you joining us from today?
Thanks, Mark. Yes, I am in Manhattan. Everything is good here. I don't have a steed. I want to get a steed.
I think we all need steeds now as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. I'm looking around the studio here. It's loaded up with goodies for a lot of you pro folks out here. So I'm not sure where I would put a steed if I were to acquire such thing. Not sure if the zoning of downtown Chicago allows the housing of steeds in studios. But hey, we cross that bridge when we come to it. Better to ask forgiveness than permission, I always say. Of course, shoveling the poop of the steed in between episodes of the shows, probably not my favorite. That's probably what the producers and the interns are for. I'm here to break down the markets out here today, listeners. And we got kind of a weird one. We're coming off the heels of some big earnings numbers and also a big CPI number out there. And those CPI number, inflation looking like it's at least coming, I won't say coming to grips, but at least coming in along the lines of expectations, perhaps even a little bit better, depending on where you were looking. So the market obviously liking that. Disney reporting some numbers last night. The numbers seem to be mixed across the board. A lot of the outlook, not great, but the market did seem to like what they were putting down out there. They were up about 3 points at one point there. So at the end of the day, more buyers than sellers. So those folks out there liking themselves a little bit of the old Diz. And all of that was lifting the markets. We were looking up to about 45 and a quarter or so on the S&P, which is roughly 50 handles north of where we are right now, listeners. Right around 44.75. We're pretty close to it. Still up, but only up about 10 handles, or about 0.25%. I say that to say it doesn't seem like today's rally has a ton of legs. It wouldn't surprise me if we are red even by the end of the session out there today. Up about 0.2% right now. The Dow up about 1/3%. And the NASDAQ also up about 1/3%. So intriguing stuff out there. Earlier in the morning, we did see them, of course, as this rally was really in high gear, we did see them come in for VIX. They crushed it down to about 14 2/3 or so. It did seem like the event risk was out of the market with CPI, and they were just coming for VIX. Since then, as the worm has turned a bit out there, we have seen VIX start to rally again, back up to about it was 15 and 15.65. Now it's up to about a 16 as we're kicking off the show. So that puts it still down from where we were on the show last week, only down about 0.25 point. So intriguing stuff. We'll see, probably up on the show at least in a few minutes. VVIX at about 100 when we kicked off the show. It's up 2 points. So we're back in triple digit land, listeners. So stay frosty, stay on your toes. VXX 2440 when we commenced operations. That's down about 0.6 point. UVXY 1790 down about 0.8 point. Again, I'm sure if I re-racked those now, they probably would be a little bit higher. SVIX 2760 up about 0.8 point, and UVIX 410 down about 0.15. And our old friend VolQ, aka the at the money vol of the NASDAQ 100 at about a 19 1/4, up about 1/4 out there. So an intriguing day. The market kind of poised on a knife's edge right now, listeners. Not sure really where it's going to go. Has retreated aggressively from the highs. But let's go around the horn and see what's catching everybody's eye. Let's start out there in the land known as Manhattan, where we are joined once again by the FLOWMASTER. Mr. FLOWMASTER, sir, what is catching your eye out there in today's kind of topsy-turvy markets?
Yeah, it's a little volatile if you look at the kind of the intraday swings. It was a pretty solid spike higher this morning. To see the S&P futures up 45 or 50 was kind of fun. It has faded. We're kind of think we're up about 8 or 9 handles right now. Actually, I mean, I don't know if it doesn't feel to me like we're sitting on a knife's edge. I think that, we had CPI data this morning too. So, to me, it kind of feels like, the market is kind of trudging along, with, the general view that the soft landing is going to be fine. I saw some rumblings about deflation in China hit the tape yesterday, and actually heard an economist talking about it last week. So that might be something that kind of starts to pop up because that makes people pretty nervous. But I mean, otherwise, it feels kind of like a normal day to me. Volume's pretty solid. Running around 45 million contracts a day. VIX is back around 16. I think we had a brief moment up at 18, but now we're kind of back at 16, which really nowadays feels like kind of the average, maybe the low end of the average, but kind of just kind of a normal day.
I maintain my point, sir. Balanced on the knife's edge. Because it sounds much better for radio than just a normal day. I think that's our title for the show. Balanced perilously on a knife's edge. What do you think, sir? I would download that episode if I saw that.
That is compelling. You can go with that.
So, yes, collectively, listeners, we are all still balanced dangerously on the edge of the knife, wondering which way the market will go hither and yon. Let's go now to Uncle Mike, because we know which way he thinks the market's going to go. If he had his druthers, it'd be right back up 50 handles, back to where it was a little while ago. Uncle Mike, sir, what do you think right now as these markets balanced precariously on the edge of a knife, sir, as everyone has confirmed here on the show already?
Balanced on the edge of a knife. I like that. So with that, what I'm seeing right now in the marketplace, we had everyone, or CPI did what we thought they were going to do, it sounded like, and markets really aren't doing very much in terms of where they are at right now, but they've done a lot throughout the day today. So it's definitely a good day to be a day trader if you're on the right side of your trades, that's for sure. What I'm finding interesting right now is that you could make a case that we are at a little bit of a floor here. We had tops on, I'm just looking at the S&P right now. If you draw a line from roughly June 16th, we had a top, and then the end of June, the 30th, and then right before the 4th of July, we had some numbers around this area. Market dipped a little bit, then it came up, and now it's coming back to those numbers with which we were at that point, and in the mid to upper mid 4400s. And so this could be a little bit of a area of support for the market in the short term. But one thing that I do think is important right now is that I still remain cautious, because that little technical potential thing that I mentioned has to fight a lot of things right now. It has to fight the Fed. It has to fight the uncertainty out of China. And let's not forget, we are into election season. It's going to become more and more to where that's going to be a factor that's moving markets. And maybe it's good, maybe it's bad for the market. Who knows? But that's another thing with which we have to kind of have an overcoming of, if you will. And so on there, with the uncertainty with which we have, that's kind of an area to where I think you need to be very cautious. Now, if we do go to the upside, the areas with which I like right now of where the market could go, I believe the next step up, if we can get past the 4,600 mark to where we kind of had a little bit of a top from tops in February of 2022, tops in April of 2022, and then just recently we couldn't really get through that. But if we were to get through that, then I think the next level or the next stop, if you will, for the market would be the 4,800 level in the SPX. So I think 4,600 is the current stop sign. But if we can blow through that stop sign, not that I'm advocating traffic violations for anyone, especially now that I have a 16-year-old driver in my house, I think 4,800 would be the next stop. But for right now, I think 4,600 is the barrier, and we're a ways away from it at this point.
Yes, indeed. As these markets balanced precariously on the edge of a knife, they can go either way. You know what else is balanced on the edge of a knife, listeners. It's the Rock Lobsters connection. Let's see if we still have him. Mr. Rock Lobster, sir. Are you still there, A? And how can you even deal with the tension, sir, as these markets balance just precariously can go either way, sir?
It is. I'm stuck in Microsoft Skype hell because it keeps trying to throw me out of one account and into another. It's just annoying as heck. But as I sit here and watch the markets, TOSAW being cautious. That's a new one. I don't know if that. I'm trying to remember the last time I heard him being cautious. But yeah, there are some definite headwinds. And SPX has gotten within shouting distance of an all-time high. And I mean, as far as I can tell, and this is the odd part, I thought a lot of the economic growth was like the post-COVID, everybody just going back to work. Government basically flushed the system with, I don't know, $10 trillion or something like that. And now we're dealing with how much of a mess that is, to be quite honest. So I think as far as the economy is going, it was going fine. It was the amount of money sloshing around in the system that was not fine, and some of the other bottlenecks that were a result basically after the election. So I think we kind of got a double whammy. You got the Russian thing, you got some employment bottlenecks, and we had a lot of money going in one place. And anybody that's buying food knows that just buying food is still pretty expensive. I think our grocery bills are up like 50% in the last 2 years. I don't know how anybody else's are, but so anyway, I think inflation is still here. Another thing is how much, and I think there's a lot of auctions going on, treasury auctions, where I don't think 4% held for the 10-year, which, again, I'm not a big treasury person, but the value of bonds are going down as, rates going up. So people are demanding more money or more, they need a higher interest rate. So the whole government thing, spending and they just reported a ridiculous deficit again. So I think the biggest problem is no one is minding the store. Either party, nobody's minding the store, and they're just spending money. I don't know. I think every crisis brings us to a new level of government spending that we never pull back from. And I think that's a huge problem. So as of right now, that's where we are. And I think traders are starting to look at the level of equities and saying, hey, is this sustainable? Now, most, or I would say a big chunk of the rally this year was because of 10 stocks. And I think they've all plateaued for the most part. So I thought at least the thesis would be, hey, that this should be better for the other, if the economy is growing because we've thrown so much money at it, this should be better for, basically the other 490 stocks in the S&P 500. And I still believe that, but as of right now, that part of the market has not really picked up stock prices. So, yeah, I would say things are cautious. VIX is 16, but last time I checked, we still haven't really been able to have a close that is substantially below 2%, let's say. We haven't had a 2% sell-off, and I don't know how long that's held. So, I mean, you see what's going on one hand, but people aren't selling stocks on the other. And ultimately, if they're not selling stocks and the S&P 500 is not going down, it's hard for VIX to stay where it is right now. But we're back to kind of okay, we have a trading market. We have that little dip. You have to make sure you sell whatever put you own, and then wait for the rally back. So I think we're stuck in a little bit more orbiting market, and maybe 4,500 is the new orbit in the short term. So I was actually looking for flies struck. The long side of the fly was 4,500 today, and none of the pricing looked very good. So maybe I'm not the only one with that idea, because the liquidity provider certainly was not. They weren't giving those flies away at all this or at least this morning. So I'll look again this afternoon, but as of right now, it does not look like the market wants to hold up, even though the inflation number is, it's decent. But now if the market doesn't care about that, then we're in kind of another kettle of fish. So I'm going to jump into the TOSAW, cautiously optimistic camp. But I think the best thing that right now that could happen is the government says, hey, we're going to freeze spending for the next 2 years. I think that would give people a lot of confidence.
It's almost as if, sir, these markets are balanced precariously on the edge of a knife. So
yes.
I'm going to keep ramming that home until we all agree here. See, you know what? Some of these numbers are actually backing me up a little bit. I've always said VIX likes a good whipsaw intraday, and we are seeing S&P pretty much unched now, listeners. Man, we are giving it up here. Again, some might say balanced precariously on the edge of a knife. 746,000 contracts on the tape right now in VIX land. So we're already pretty much at the ADV, which is 765, listeners. So that's a bit of a banger day for right now. We'll see where we end up at. Are we going to break 1 million today? Seems like we're on trajectory for it. A couple of big trades out there could easily put us in that direction. And that's, again, showing that the market's not tranquil right now. They're putting up some numbers. SPY saying, look out below, 7.25 million contracts already. The ADV a little over 7.5. So spoiler alert, could hit that in a few minutes. So SPY definitely liking a good whipsaw out there today. The S already over 2 million, 2.01 million to be precise right now. The ADV 2.8 million. Who says these markets aren't balanced? Dangerously on the edge of a knife. Listen, let's look at these numbers. How could you argue with me? IWM 622,000, the ADV 852. So yeah, spoiler alert, it's probably going to get there as well. And the Qs, they're almost already there as well. 2.81 million already up in the Qs. The ADV 3.5 million. So this is a banger day. Listen, let's go out to the single names and see if they can deliver. You know our barometer for single name bangers. 300K is usually that line, and we are close, listeners. We are within spitting distance. In fact, let me just re-rack this right now and see. Yeah, about 274,000 contracts is where we are right now. So not quite over that 300K level, but pretty freaking close. That gets us to good old Softy. Again, the market's had a wild ride. A lot of these big leading names also have had wild rides. Let's just detail some of the saga that is Softy today. It's up about 40 cents right now today, so almost unched on the day. They rallied it all the way up to 328.25 this morning. It is trading 322.64 right now. It got down to 322 almost even, so it's had about a $6.25 range already today. My goodness, this market, again, some might say, poised on the edge of a knife. Number 9, we got good old Palantir. This one has been a perennial top tenner ever since it announced earnings last cycle, and it rallied from around $7.50 all the way to where it is right now, 15.5, and it got even higher in between, up to about 20.25. So we were talking about this, seemed like they wanted to rally it to the 20 handle. It did get there. Then it gave up the ghost pretty hard. It's off $3.50 over the past 5 days. Of course, you look at it today; it's had an interesting day today as well. It's up about 20 cents right now, trading right around 15.40. Got as high as nearly 15.90, and the low of about 15.25. So we'll see. This might turn red on the day as well. 283,000 contracts for Palantir, and the number 9 spot. Number 8 is Ford. I haven't talked about Ford in a while. 305,000 contracts for Ford. They're coming for Ford today, off about 55 cents or about 4.25%, trading right around 12.20. It's had about a 60-cent range on the day today, which is decent for Ford. And certainly a decent paper, 305,000. That sounds like we're going back to the old meme stock days when everyone and their mother was slinging Ford thanks to that sizable Rivian stake. Number 7, we've got AMD trading 110 and a third, off about 12 cents or so. 421,000 contracts for AMD. This one is another one. It had a high of nearly 114, and they crushed it down to 109.80. This one's had about a $4 range on the day already as well today as well. So intriguing stuff here for AMD. Number 5, we're still staying in the A-related tech names. It is Amazon. Still green, but for how long? 138.20 right now. They rallied this one up to 140.41, and the low came at 137.93. So we are right about at the lows of the day right now, listeners. And again, good for 450,000 contracts. Number 5, it's BABA going back to China. I guess all is right with China again, at least for right now. 526,000 contracts on the tape for BABA, trading 100 and a quarter, up about $4.50. On the day, it got down to 97.12, and the high was 101.84. I'll just work 100 to the other direction. But yeah, interesting range for BABA out there today. It's on again, it's off again, it's on again with China. It's kind of a dizzying trade. Some might say that market also poised on the edge of a knife. You guys are going to write in with hate mail by the end of this episode, I'm sure. Back to number 4. It is good old Diz. This one's a weird one today as well. Trading 91.40 right now, up nearly $4 or 4.5%. This is a head scratcher because if you look at all of the numbers coming out of Disney, they weren't great. I think really international parks was one of the few segments that actually did all right for them. Everything else was pretty much down. You look at all the major headlines coming out of their announcement. New York Times, Disney streaming losses and TV decline are a 1-2 punch. CNN, Disney Plus hikes prices as sales sink across the company. Barron's, why ESPN's pen deal isn't good news for Disney stock. So it seems like just a litany of negative headlines. And they crushed this thing early. They got it down to 87.88 after opening at about $90 even. And since then, they have rallied it. So if you go down to the low, 87.75, it's at 91.5 right now. So they have rallied it hard. So very interesting. A lot of analysts coming out and slashing their price targets as well, but apparently more buyers than sellers out there today. So intriguing stuff. What were your thoughts on the Disney earnings, listeners? Intriguing stuff. The initial blush was positive last night too, which kind of surprised me. Again, it's all about how they spin it. It's a shell game. We all know this by now. So obviously Disney doing a good job on the spin, but intriguing stuff nonetheless. Good for 580,000 contracts and the number 4 spot today. Then we go out to number 3. It's the fruit company, Apple, 720,000 contracts. It's red now, but only slightly, 15 cents or so. On the day, got down to 177.80, and the high was 180.75, trading 178, pretty much even right now. So Apple, some might say, also poised on a knife's edge right now. Good for 720,000 contracts. And the number 3 spot, number 2, the other half of the chip zone, it is NVIDIA, 909,000 contracts, trading about 424 right now, off about $1.60 on the day. Got down to 418 and a third, and the high was 435.75. Holy crap, almost $17.50 range today for NVIDIA. My goodness, I'm surprised it's only done 909,000 contracts. What a day, listeners, and it's not even over yet. And then number 1, all that action in NVIDIA couldn't take the top spot, listeners. If you come for the king, you best come fully loaded because it's Tesla yet again today. 1.5 million contracts on the tape. Tesla saying, the hell with the rest of you. We're still going to be green today. Up about 2 1/3, about 1%, trading 244.5. Of course, intraday got up to about almost 252, 251.80. So they have shed most of that. They got down to as low as 243.80. Obviously, they bumped about 80 cents from there. But man, takes a lot to dethrone Tesla. Even with news, their CFO leaving, all kinds of news. Every day that ends in Y, there's crazy news in Tesla. 1.5 million contracts today, outpacing. It's almost beating NVIDIA and Apple combined. I mean, that's crazy out there. But that's where we are right now. Speaking of crazy, obviously earnings season driving a bunch of action this week. We had Palantir on Monday and Beyond Meat. Tuesday, we had UPS, AMC, Bumble, Duke Energy, a.k.a. The Duck. Wednesday, Roblox, Sony, some company called Walt Disney, never heard of them, Wendy's. Today, of course, Alibaba, backed. You guys still care about them? And Six Flags. Intriguing stuff. Luckily for you folks, we are looking at some updated earnings move results, and earnings season reports. You folks can check those out for yourselves over there, theoptionsinsider.com. Right now, the season hanging out. Still at a fairly robust 121%. I got to imagine we're probably going to come in from there. The long-term average right now is 98%, and that is in and of itself pretty inflated. We were down in the low 80s, if not below, in kind of the height of the pandemic. So intriguing stuff. We have a lot of data on this stuff going back years now, listeners. If you want to check it out for free because we like you all, we won't make you pay for a research subscription to big houses like Goldman and depositing big money with them. Nope. Just head on over to theoptionsinsider.com, click on the Options News and Articles tab, and you can begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. I always love the Thursday edition of the Odd Block because we get to unleash the eye of the FLOWMASTER. Before we get there, though, we have to talk about this ridiculous nonsense that we highlighted on the show on Monday. Back on the Monday show, it was myself and the Meatball, and I always love having high-fashion options trades to talk about with him because that really kind of covers his two Venn diagrams. They converge, high-fashion retail and options flow. And that's what we had on Monday, listeners. We were talking about Capri Holdings. It stood out in my memory because we haven't really talked about Capri that often on the show. It's a fashion holding company founded by Michael Kors. They own a bunch of other brands within there. And it's just struck us as odd, someone coming in and loading up on 5,064 of the SEP 42 halves. The stock at the time was $35.62. They paid about 77 cents for these things through the offer. So they really had to get a hold of these bad boys. And it just struck us as odd. It was a weird trade, very aggressive for a fashion house. It's almost as if they knew something was going on, listeners, because previous to that, this stock had been on an interesting trajectory. A year ago, it was $50. They rallied it all the way to almost 70, 69 and a quarter. Then they had crushed it. Like we said, it was about $35.62 when this trade went up. This options had a long way to go. Seemed like perhaps a bit of a bridge too far. And then lo and behold, since our last show, in fact, last night, listeners, they announced a takeover of Capri Holdings. And the stock today, listeners, up 56.25%, or nearly 20 handles, trading $54 right now. So spoiler alert, check right before showtime. These calls are still open. They haven't taken them off yet. And yeah, they're looking pretty good right now. The 42 halves, the stock's trading $54. I'll let you do that back of the napkin math yourselves, listeners. But, you know, we see a lot of shady, well-timed paper. These are pretty good. Obviously, they didn't know exactly when the takeover is going to happen. That's why they went out to September. They weren't trading in the weeklies. That would be even more suspicious. Maybe they were trying to divert a little bit of suspicion as well by going out a little bit farther. But either way, just a banger. Mr. FLOWMASTER, did you notice this, shall we say, ridiculously well-timed paper on Monday? And what are your thoughts on someone just making some bank on Capri, sir?
I did not notice it on Monday, but I do see, looking in the hindsight model, that 7 times normal volume. That usually would have hit my radar. I just wasn't paying close attention. You know, we do sometimes see some flow that's suspect. Maybe they got lucky. I mean, one of my best stories involved takeover years ago in, I think, Sealed Air. And the reason I could kind of tell they knew something was up is they didn't just buy calls. They bought call. It was a cash deal. So they bought calls kind of in near term below the target price, but they sold a bunch of calls that were further out so that when it was cash deal, you know, time decay goes to 0. And so they made on both sides. But yeah, you some of this flow does turn out to be awfully prescient.
That's a nice way of putting it, sir. Mr. Rock Lobster, what say you, sir? This is a bad one. If you were the market maker who sold these, you're got a bit of an ouchie right now. I'm having flashbacks to some of my days in single name equities and just all these good trades that just ran you over. Mr. Rock Lobster, sir, what say you of these well-timed Capri calls?
Just saying right now at showtime, we are definitely now perilously balanced because the market just turned red, is down now 1/100%. Oh, no, it's back to even. Oh, okay.
It's almost as if I knew what I was talking about, sir. See?
I wish, you know, what's funny is all the volume we look at, and somehow I missed that print, which is a little aggravating, to be quite honest.
Yeah, because you would have bought a ton of SEP 42 halves for 77 cents. I don't think so.
I would not have. I'm going to be quite honest, but it's annoying it didn't come across because we've seen some other paper that looked pretty egregious, but I have not quite gotten the result that particular.
I told it to the meatball. He could have shared it with you. I guess he wanted to keep it to himself.
I guess he did because he didn't share it with me, the dog-faced boy.
Dog-faced boy. Uh-oh. Cracks in the armor forming over there in the land of the pit. Let's keep on rolling before we uncover more fights internally. Let's go out to the eye of the FLOWMASTER. The first name that he has fixated on today is SentinelOne. This is a cybersecurity company, listeners. Ticker symbol S. So getting the old one-letter ticker. They're hardcore, trading $15, pretty much even right now, off about 6 cents or so. They've had a range of about 60 cents on the day today. On the year, let's see a little bit more action on the year. You go back a year ago, they were trading $28, and they rallied in September to hit $30 exactly, 30.00. You don't see that too often. Usually you see 29.97, 30.03, something like that. Nope, $30 exactly on September 12th. And that was kind of all she wrote. They crushed it down to about $13 back in December. It kind of vacillated for a while. In May, they tried to rally it. It rallied from about $15 up to about 21, and then it fell off a cliff again at the end of May. Went from $21 back down to 12, and it hit this low for the year actually of 12.43. So kind of a topsy-turvy year here for this SentinelOne name, but mostly down and hanging out right now at about $15. So a little bit off the lows for the year, but still cut pretty much exactly in half from where it was a year ago. A long way around to saying, Mr. FLOWMASTER, sir, what did your eye of the FLOWMASTER notice in SentinelOne today, sir?
So this name I've been paying attention to for a few days, partly because every time I see it, I think Sears, because that used to be the symbol for Sears.
Exactly. They stole the old Sears, trying to be cool.
You got to be careful. If you go and do like some long-dated back testing, some systems will mess up and you'll be mixing two different stocks together. The trade I saw today was a pretty simple one. It's a 1,500 lot of the August 17 half calls bought for 29 cents. But that came after some kind of earlier buyers, a little bit lower, like 25 cents. And then I looked back, and there actually were call buyers a couple days ago as well, about 3,000 of the August 17 calls on Monday. So this kind of seems to be somebody layering into a little bit of a position, 3,000 or 4,000 contracts, but it's not the most active name. I think average daily volume in it is around 7,000 contracts. So, and what's interesting is they seem to be focused on the August 25th expiration, but earnings aren't until the 31st. So I'm not sure why, but somebody does seem to be leaning long in SentinelOne. So that's kind of worth a look.
Worth a look indeed. Mr. Rock Lobster, sir, if you have recovered from your Capri shock, sir, what are your thoughts on this little bit of upside love in SentinelOne, sir?
A little bit of upside in SentinelOne. Interesting. All right. Ooh, bought today for next week. It does have the whiff. Is there any earnings here on this one? No, it does not. I'm trying to look right now. Interesting. So, prior earning. Maybe they're looking for a little bit of an earnings run. Maybe like a little bit of pre-earnings, like an Nvidia. But is this stock Nvidia? Probably not. Probably not Nvidia. It does look like a little bit of a non sequitur type of trade. I have to say though, it does not fill me with confidence when they're already kind of taking it on the chin here. As much as I appreciate the FLOWMASTER, this particular person, their calls are not doing very well today. But it's not a trade that thrills me. It is something great has to happen to make any money trade. It's always possible. Like, let's say the company gets taken over, surprise, by somebody. But that's what it would take, I think, to make money on this.
We know what it takes to make money in your Capri calls, Mr. Rock Lobster and Mr. FLOWMASTER, is you sell them. I just happened to check right now, and the person who bought those 42 halves back on Monday dumped them a little while ago for $11.60. So they bought them for 77 cents, roughly, listeners. They dumped them for $11.60. So in case you don't want to do the math, that's about $5.5 million just on that 5,000. I think they did a few thousand more on top of that as well. So yes, they were able to liquidate those. The broker, no one froze them. Hopefully someone is taking a second look at that trade now. That one is just suspiciously well-timed. Maybe we'll highlight it just so the regulators can have a second look. Maybe you want to take a look at these. As we keep on rolling, Mr. FLOWMASTER, he's keeping with the theme of the show today. He knows we are balanced precariously on the edge of a knife right now. And so is the world of online gaming and wagering, obviously sports wagering. In particular, DraftKings, one of the leading names in that space. Of course, this recent deal with ESPN taking over the old Barstool Sportsbook could pose some challenges for them. Obviously, ESPN now, they could be in position to hype their own products, which we have seen them do when they have a relationship with the sport. They get much more heavily vested in it and promoting it and talking about it than they were before. Look, they have a deal with UFC to put their stuff on their app, and now all of a sudden they talk about it and promote it all the time. So they do talk about the things that they have a vested interest in. So their journalism kind of falls by the wayside when the numbers are involved, and that's what people are worried about maybe here with this deal, which is why DraftKings taking a turn today off about 2.75%, trading $27.50 off about $0.75. It got as high as nearly $29 earlier today. So they have come for it. And again, no surprise when you got the twin guns of Disney and ESPN taking firm sights on your business. Never a good thing, probably in the long term. Even though a year ago it has been a good run for DraftKings. A year ago they were trading $19.35. Then they crushed it. Listen, they crushed it all the way down. In December, it got to $10.69. How much of that do you wish you bought now, listeners, back in December? So they ended the year pretty much on the low. And then since then, it has been straight up. They're up 149% since the first session of this year. So my goodness, quite the run, listeners. They got to 34.5. That was back in the end of July. Obviously, this news taking them down about $7, but still looking pretty good. Up about 149% year to date. Going back a year, they're up about 42%. So intriguing stuff. Mr. FLOWMASTER, sir. DraftKings poised precariously on the edge of a knife. What did you notice out there, sir?
Well, I found this trade because first I went looking for a ticker called Knife, and there is one, but it's awfully thin. But then I remembered CBOE does have an exchange called the EdgeX. So it's one of the 4 options exchange we run, and the biggest trade on EdgeX, Edge of the Knife, was in DraftKings, and it's this August 27.5-29 put spread, which actually printed mid-market. So when you get a mid-market spread and it looks like a vertical, it sometimes is a little bit hard to be sure, but I was able to confirm with the exchange actually that it was a seller. So this is a customer seller of 7,500 of these 27.5-29 put spreads, 84 cents. And I actually think they might be adjusting the 25.29 put spread was bought a couple days ago when the stock was about $1.50 higher. So if that's the case, and it kind of feels like it to me, they're kind of taking some gains on the fact that the stock has sold off and resetting their exposure a little bit. So I think it's an interesting one. I love kind of looking for trade, looking for new flow, I think is probably the most exciting. But it really is important, for people trying to watch option flow to be able to make some sense of trades that are either closing or adjusting. And this one looks like a seller. It's obviously a very popular name, and there's plenty of headlines that will probably persist. And so, kind of like we said this morning, it's been a fun kind of trader's market, a little bit kind of range bound, and that's what this one kind of feels like to me.
Mr. Rock Lobster, you get the last word, sir. What are your thoughts on all this action out there in DraftKings today, sir?
The DraftKings things is a little interesting because they're selling stock with it. Kind of interesting. Customer seller with stock. I'm trying to get. Yes, bought yesterday with stock too. So they closed the put spread with the stock a couple bucks lower.
Oh, and then it looks like they rolled. And then they rolled. So they're just taking their money and running. I think ESPN with Penn will be a bigger competitor, I guess, than with Barstool Sports. So they're having a rough sled. I just looks like the customers just like taking their money and they're trying to like press and try to get a little more out of it if DraftKings goes lower.
And we must press on with the show, listeners, right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, let's get to it. Let's dive right into the hot action of the week on our question of the week. Last week, we asked you folks, hey, VXX, bit of a crappy year last year. Are you trading it again or have you moved on? Gave you 4 choices. Yes, I never stopped. Yes, they lured me back in. No, I don't trust it. Or no, I trade other products. And nearly 2/3 of you chose no. Whether the winner was about 42% saying, no, I just trade other products now, I moved on. The other 22% saying, no, I don't trust it. Again, you add those together. Almost 2/3 of you saying you're just done with VXX. Can't really blame you on that one. Yes, they lured me back in, 19.5%. I might find myself back in that camp as well. And then, yes, I never stopped, 16.1%. Those people I want to talk to. If you never stopped, what will it take to get you to give up this product? Apparently, you have a hopeless addiction to VXX. Moving on to this week, and speaking of names that people are addicted to, they can't get enough of these meme stock names, it seems like right now. Our question of the week right now, we've seen a resurgence of volume in AMC, GameStop, SoFi, Mara, and other popular names from the 2021 meme stock frenzy, which raises the question, is the meme stock frenzy back? Uncle Mike, when I think of people who were knee-deep in that original meme stock frenzy back in 2021 and can't stop slinging some of these crappy short squeeze names, I immediately think of you, of course. So first off, what are your thoughts? Do you think the meme stock frenzy is back, yes or no? And then B, more importantly, what do you think our audience is up to, sir?
I think the audience is going to say, no, it's not back. And then my opinion is that I'm not convinced it ever left, per se. It just got really small in terms of I wouldn't call it a frenzy level, but I'm willing to bet that there's meme stalkers that have been out there that have been doing that, but just at a much lower level. So that's kind of where I'm at on it.
I'm going to say, yes, it is a frenzy. And, of course, balanced precariously on the edge of a knife, this meme stock frenzy. Will it come back? Will it not? As we keep on going, I just hammer this metaphor to death, listeners. Let's go out to the rockingest of lobsters, Mr. Rock Lobster, sir. What are your thoughts? Do you think the meme stock frenzy is back? And then B, what do you think our audience is voting for?
I don't think the meme stock frenzy is back. I hate to throw cold water on that. And I don't think they're going to say no either. It's going to be hard for that to come back, I have to say.
You throwing cold water on all of our fun here. That's why we call you the Rock Lobster. All right, let's go out to the FLOWMASTer. I saved you for last, sir, because you come armed with data to this conversation. So what is your data telling you? Is the meme stock palooza back? And then B, what do you think our audience is voting for, sir?
Well, the data shows interesting. I mean, it's a little bit like kind of hot and cold. There are days, plenty of days where we're seeing some of these like pretty obvious cases of super speculation, right? Like Tupperware was one, and Yellow Freight that basically went up after they declared bankruptcy was another. I was just looking at WeWork, which is kind of down into single pennies, I think, is actually up 123% today, which means it's up 16 cents to 29 cents. I don't think it ever really went away. It definitely got quieter. And I think that it is very, very fickle, right? So, the data, lets you go look for these names that kind of meet all these criteria, low dollar stock prices, definitely hard to borrow. And then, I think there's still some people out there that feel like they can kind of goose things through, between trading activity and maybe some social media type of efforts. So I don't think it's gone, but it's definitely hot and cold. And I would probably say your listeners do not think that it's gone.
A lot of you leaning on the no tip, and right now our listeners, right now our audience, 54.5% saying no, the meme stock frenzy is not back, and 45.5% saying yes. It has been very contentious all the way through. For a little while there, it was exactly 50-50. We don't see that too often. You got about a day left, so if you haven't voted yet, at options on the old Twitter/X platform, listeners. As we keep going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. I said at the top of the show, I wouldn't be surprised if we dipped into the red, and we are pretty much there. We did dip ever so briefly into the red, then kind of popped. We're pretty much unched right now in the S&P and the NASDAQ, and up slightly in the Dow. Still got that Diz bump carrying the Dow up a little bit, but we are probably going to drift into the red here again. I just hit unched literally now, so we'll be red any second now. So a lot going on. Uncle Mike, we'll start with you. These markets quite literally balanced on the edge of a knife right now, sir. What are you keeping an eye on until our next episode on Monday?
Well, it's kind of hard because of how I'm balanced on the edge of this knife. I got to keep my balance and keep my eyes on the prize. But for the love of our listeners and my clients, who are often one and the same, what I'm watching right now is to see if we can make a run at 4,600 in the next week or so. I don't know if we will, but I think that's the main barrier. And a lot of the news is out. So how are we going to react to that, along with the future uncertainty with which I discussed at the beginning of the show?
And we are red now. Mr. FLOWMASTER, same question for you, sir. What are you keeping an eye on until your next appearance on Thursday?
I think I kind of feel like we're going to be a little bit sideways. I put a presentation together yesterday for short-term 0DTE options activity. I'm doing a webinar on interactive brokers next week where I'm going to mention it as well. It's obviously been a huge kind of growth driver in the products that have it, which is, SPX was first, but also it's very active in SPY and Qs and NASDAQ. And I think we'll continue to see an expansion of those short-term 0DTE options flow. Today, actually, when we started the show, I think more than 55% of the SPX flow was 0-day. And to me, Trade Alert and LiveVol are great kind of systems to obviously keep an eye on the activity. But for traders who are quantitative and like to dig into data, it's a lot of fun because the math is actually easier when you're talking about one-day options, right? You don't really have to worry about vol. You have to worry about the price you bought it at and the price that it expired at. And that's kind of opening up all sorts of new, kind of angles for research and strategies. So that's what I'm focused on currently.
And last but not least, Mr. Rock Lobster, sir, what are you keeping an eye on until our Monday episode?
I got to look at the same thing. I'm with TOSAW. The news is out. I don't think the market likes it. VIX clearly vol is pressing higher. I think these bond auctions are starting to spook the market. I think the amount of debt and I'm just going to say, reckless performance by our elected leaders, all of them, is starting to give people a little pause. And that's where I think and we haven't had a pretty decent sell-off in a while. So I think that's I want to say the negative side of the coin. On the positive side of the coin, most of the earnings have been fairly good, except for Apple. There wasn't really any big surprises. I think, again, that the bond market is definitely the dog that wags the tail. So if it's sneezing, equities are sneezing as well, or, equities are catching COVID. So I think that's what we have. So I don't know when maybe the PPI tomorrow will calm things down, but to be quite honest, I think we just kind of meander around because there's not, there just hasn't been the real taste to really sell equities hard yet. But that's what I got for you.
It's almost like these markets are balanced dangerously on the edge of a knife, sir, So.
on the precipice, yes.
All right, listeners, that music means We are done with our balancing, at least for this show, at least for right now. If you want more balancing in your lives, a little bit of vol talk maybe as well, come back in about half an hour if you listen in live. We will be chatting with the once in future and now present Dr. Vix to break down all the action in the world of futures options. He's loving himself some crude oil and nat gas and gold and everything you can think of under the sun that trades over there. So he's loving himself, the old CME hot seat. So join us in a little while for that one. Of course, if you're listening after the fact, just hit next. That episode will be waiting for you. And Mr. Flowmaster, a lot of our listeners are loving what you're dropping here in terms of all the data and the charts. They also want to get access to all these cool trade of the day reports and these cool email reports you guys are putting together. So if our folks are intrigued, so they want to learn more about all your, as they put it, good goodies over there, where should they go? What should they do?
Just head on over to SCBOE.com/RMA, which is Risk and Market Analytics. You can request a trial. As I said, I'm happy to add people to the Trade of the Day email, which is not yet commercialized, but I have the power to add people. So just send us a note, and we will help you out.
There you go, CBOE.com/RMA. And Mr. Rock Lobster, sir, where should folks go if they want to check out all of your good goodies?
Go to optionpit.com. And if you heard this show or do Money Map Press for weekly profit cycles, if you heard this show here at Option Pit, you get 10% off. There you go.
There you go. And last but not least, he is the uncleist of Mikes. Mr. Uncle Mike, sir, where should folks go if they want to see all of your compelling content, sir?
stcharleswealth.com. Check out my website if you are interested in working with or even talking to a financial advisor who delves in the option product and stands on, what do I do? I'm standing on the precipice of the edge of a knife.
Something like that. Uncle Mike TOSAW. Find him at stcharleswealth.com. Give him a follow over there on Twitter at Mike TOSAW, all one word, TOSAW. That's going to do it for us on the old OB. Back in a little bit with Twifo, then back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And then after that, for you pro folks over there with options oddities. So check that out if you haven't checked it out yet, of course. You know where to go, theoptionsinsider.com/pro, the place to go to learn more. And then back again on Monday, another episode of the old OB. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.